Hey everyone, and welcome to another edition of the Buddy Study Group for Worksite Solutions. Things are flying out the door here almost faster than we can keep up with. So we have another Buddy System kind of State of the Union and update, and we want to highlight two specific tools that we've released or resources that we've released for you all and just kind of go through it. And I think it'll lead to a wider ranging discussion about group long-term care as a whole. We'll definitely be talking product, we'll definitely be talking process, and all the while, you'll get familiar with the new resources that we have to share for you today. So just to outline them for starters, um, our first resource that we'll go over is our group carrier list, and that will give you an idea because I know on this study group and for group cases that we've worked, and in many cases for simplicity and efficiency's sake, beyond them being the best option for many groups out there right now, we've stuck with our four core carriers, right? We have the standard, the Trustmark, Chubb, and Transamerica as kind of our four core carriers, but there's actually a much larger roster of carriers and products that we have available for group scenarios. Um, so we want to be able to outline those for you and give you an idea of the ins and outs of where these products are designed to work. Because we know that no group is necessarily truly one size fits all. So we have a lot of products out there, even individual products applied to multi-life situations that can help fill a lot of gaps that we have out there. We get a lot of inquiries about working with this or that group day in and day out. And so it has really forced us to get creative for groups that have a tougher time finding a solution. It's no different than the individual market for a client, right? So we'll show you that wider roster. And then we have a page that we're debuting today in the Buddy system that is specifically designed for teaching you how to work the process with small groups. And I know we do have our group sales process page that's available to you in the portal that we've gone over. It'll look very similar, but with a lot of the changes that we've seen lately with our new Premier underwriting with the standard, allowing us to go down to 3 lives with no extra VB products, and more people coming to us with small group cases, we're realizing a couple of things. Number one, we're realizing that small groups are actually going to end up making up a larger percent of our business than we thought, not just from a nominal number of groups perspective, but also from a premium perspective. We're finding out the data is telling us, and it doesn't lie, that small groups are, an incredibly good way to build your business and bring revenues into the door. So, as we're being taught by the data, we're putting more attention on that, and we're developing processes that are a bit more streamlined for working with small groups with long-term care. So those are the two resources we're going to outline today. And let us know if you have any questions. Let us know if there are any cases that you're working on that seeing some of this information kind of brings top of mind. We're always happy to work through some of these things live and in color with you as we go through it. But with that, Mark, do you have anything you want to preface with before we dive right into the carrier list?
Yeah, I would. The only thing I would say is, pick your favorites that fit, where your clients are located and what group sizes you work with. This is just going to give you more options to choose from. Some of them are newer as well to us, so we're still working through trying to get the first case sold, working with their team on the enrollment process. So just keep that in mind. The market is new. There's new products coming all the time, and it may take a few months, for us to fully onboard everything.
Yes, it's a happy medium between us always saying there are new carriers coming, there are new carriers here, there are more solutions than ever, and not producing anything versus you know, putting absolutely everything that we know is on the way out there. So with that, here's the list. And this is actually an addition to our group's products page. So if you are in the buddy system and you select products here, as you guys know, we have the standard Chubb, Transamerica, Trustmark, their carrier pages up here as tabs for you to go through and do a real deep dive on those products. But we wanted to start by leading off your experience in this section with viewing our list of available carriers for groups. So to outline this, obviously we're in an industry with a terminology problem, right? But we're just going to give you our definitions of these categories. So we have true group carriers, and you can see the list here, quite sizable. And we have individual for multi-life. Okay. Pretty decent roster there as well. And then we have non-insurance long-term care solutions. So these could either be value adds or products themselves that are not technically insurance, but can still absolutely help with long-term care needs. So, Mark, I'm going to pose this to you because, we've developed this terminology. What would you consider the definition of true group versus individual products for multi-life? Because I think some of these individual products, have a bit of a structure that would allow it to work very, very well with groups. But they are individual products first and foremost. Do you think I'm getting at that right? Am I leading you
Yeah, I
right?
mean, there's
Or
like a specific filing definition. So the Department of Insurance, you file a product as a group product, it goes through a different process than if you file it as an individual product. It usually means that it has a group application, a group contract, and the individuals that are getting coverage are getting a certificate. Now, because it's portable with all these products, it means everyone has the option to take it with them and own it individually. From our perspective, if the contract language is the same and they have the same rights as an individual product, then we would treat it like individual coverage, in terms of what they're going to get out of the policy. So that's really the main distinctions, and that kind of leads to other differences in process, like we talked about with application and enrollment. But in terms of what it does for the client and what it, like you were saying, I don't think you need to go into that nuance ever. I think it comes down to, can they get guaranteed issue underwriting? What is it actually doing for them? Simplified issue or full underwriting. And all of the products on this list that we have on the group side of our portal are products for work site, which means they have some level of underwriting concession, if you will, where it's not full underwriting. So anything on this list that's how I'm defining it, at least for now.
right. Technically, you could take any individual product and, work with it in a group setting by just taking 5 paper apps on 5 employees, right? At the end of the
Correct.
day, that is possible. But to make this piece of the list, there has to be, some sort of, like you said, concessions given um, to really show an openness and a willingness to work with groups as if they're gearing toward it.
Yeah.
So,
Can I also real quickly before you get
mhm,
into the group side, just speak to that individual? It says like individual for multi-life.
mhm,
And the reason why that category is there is we're seeing a trend with individual products trying to streamline their process, right? We've seen this in life insurance now for many years, where it's like quick decision, instant decision underwriting. And there is a difference between instant decision and simplified issue. I know we're getting into more of that terminology, but are the outcomes better? Are the outcomes easier? What percentage of people qualify? That's one thing. And then how quickly can you actually get that case issued, which is a separate factor. The reason we have this category and why I think more carriers are coming into market is they finally have a process where they can give instant decision and they're starting to expand that to their long-term care products. Okay. Some of these even haven't launched yet that you see on the list. So just keep in mind if it says not available, it probably means that it's something that we think the carrier is developing but hasn't released yet into the marketplace. But that's really an important distinction. What is best for your worksite client? We want to have better outcomes. We want to know that a high percentage qualify. We don't want them to go back to HR and say like, "Hey, I thought I should get this and I can't anymore." So there is a big gap between 100% approval with guaranteed issue and maybe 85 to 90% approval with simplified issue. But if it's just instant decision and the outcomes aren't that high, we probably would not use it for worksite still.
Right. So in many cases, those types of products that don't provide a completely clean experience from the underwriting side, um, generally will be passed over in many cases, not all, but many, for these true group carriers that are offering guaranteed issue underwriting.
Yeah. And one other thing that kind of arises from all of this is the motivation of the clients here is to get a plan for everybody in the group. It's not just to get a plan for that business owner that's uninsurable. That's not going to work well with any of these solutions. They're giving you the underwriting concession because you have you're marketing to a lot of people in a legitimate way with employer funding, as we've talked about, with ways that are going to get participation. So I want to put that out there too, because if it is a client where you're just trying to get it for an individual, you're probably going to want to work with an individual product, maybe even fully underwritten product. Don't just try to use this as a loophole to get into the group market because that's just not going to end well. That's a short-term way of thinking about this, and the carriers are going to just cut it off. And we don't want to be cut off from, our ability to do this for the small group sizes.
Yes, 100% agree. And hopefully this helps you guys understand where the line in the sand is between true group long-term care and an individual product that is fitted for multi-life. Because I think everybody, no matter what, will throw out that this is a group product or this is a group friendly product or any terminology you can use to pique people's attention, but there is a definite difference. So we'll just lay that out for you guys. So this chart is living and breathing. This can be edited and redeployed essentially up to the second, and there will be many opportunities for us to do so, and we'll keep it as up to date as possible so that you guys can always just check back in here whenever you have an opportunity that's going on, because obviously we do not have this many carriers in our product buddy tool at this moment. We do not have this many carriers in our quick quote tool to this point, but this will give you kind of the full live tracking. And eventually many of these products are roadmapped to be in your favorite group long-term care sales tools down the road here. So just to review the players here for True Group, we have the standard, we know them, we love them. Term to 100, Group Whole Life are the products we stick mostly to, but they also do have a GWell product, which doesn't see as much use compared to the other two. And we've also made sure to list what additional voluntary benefits products do they have available if on the True Group side. And you're going to see the representation there is much larger for the True Group carriers than it is for the individual for multi-life, just by the nature of how these companies do business. We have Chubb, we have Trustmark, we have Transamerica. Those are kind of our first four, the OGs, if you will. But then we have Aflac. Aflac is a brand new player to the market, and their product released, I think, only a couple of months ago to this point. But it is a term to age 121. Surprise, surprise. Carriers that are coming out with products for this space are generally doing so in this sort of format that we've seen. Pretty interesting product. It's available in about 40 states right now. Obviously, it's a company with a lot of name brand recognition, and their voluntary benefits products are, really well thought of. And we're excited to see a carrier like this getting into the long-term care space. I know they had some top long-term care experts at the table when developing this product, and it definitely shows. Structured very much like your Chubb, Trustmark, and standard term with long-term care offerings, but also offering some inflation protection. Generally, we're looking at simple inflation protection. And the way this product works is if you do elect inflation protection on the long-term care benefit, then you can't look at the restoration of death benefit. But both of those are available as well, of course, as extension of benefits for long-term care. So pretty standard offering there. We're looking at a minimum group size of about 25. They are receptive to employer funding. And there's a lot more that's interesting about this product to dig into. We'll probably do a study group to highlight that ourselves once we get a bit more of a grip around the product and get familiar with the team. I could see this product getting a lot of use out there on the marketplace. And we're just kind of familiarizing ourselves with the carriers and key contacts. So I'm sure we'll have somebody from Aflac directly on to present on the product as well. So keep that one on your radar. Very interesting product from what we've been able to see. Now, Voya and Equitable, they have been around for a little bit. Voya at least a year plus. Equitable, yeah, I would say about 2 years to this point. Equitable is essentially a carbon copy of lifetime benefit term, or as close as you can get to it. I don't know the terminology, Mark, but they essentially like licensed uh, the use of LBT of sorts under the Equitable name. I don't know if you have a more eloquent way to put that, but
Yeah, no, I think that's a good way of describing it. And Chubb's product is what we're talking about here.
mhm,
The one thing I would say is that it is a little bit higher priced, so it's definitely priced differently
mhm,
from what I've seen. And they do want to have multiple products offered like Chubb does, but they have a different other products because those are Equitable manufactured products. And both Chubb and Equitable are also developing their own products. So they're licensing the product as a way, a bridge until they're ready to build their own products or as even like a test to see, how popular they are in the market. So those are also going to change over time. So Chubb just came out with a new product that I think is their own manufactured product, not licensed. So, so maybe more than you wanted to know, Jason, but as usual, but
no, I think it's good. I think this perspective helps everybody get an idea of the demand, right? If a carrier is kind of licensing the use of a product from another carrier as a bridge to developing their own product, what does that mean? They want to get into the market very, very quickly and be a part of this thing. So Voya is another carrier that we have in the space that's kind of been tangential, I would say, to some of these other carriers in offering, again, a term to 121 product. Generally, they're looking at a minimum of 100 lives. Not available in all states, but quite a good selection of states. And again, same sort of AICIHI, you'll see these offered with all of the true group carriers. Um, and Mark, what are your kind of early thoughts on Voya? I know somewhere deep in my notebook I have pages of notes on Voya, but for some reason it's just escaping my mind right now.
it's
I
okay.
know they
No.
have some niches.
Yeah, I mean, the big thing is that they wanted to get it to market because their existing group clients are big in that worksite space, want to add long-term care, and they don't want them to walk down the street and go to one of their competitors. And I think for that reason, they're priced kind of in the middle of the pack. They're really priced or designed for large groups, which sometimes, may not fit people in this study group just because your clients may not be in that large group space. Oop, it looks like you're opening up some stuff there.
Yep. Mhm.
But the big thing is they really kind of took that Trustmark model, with their term to 121, their new product, and they wanted to have something comparable to it. So far we haven't done any cases, to be quite honest, because it hasn't. stood out because it was, kind of like almost a little defensive, I think, of a
Yes.
design to start. But it doesn't mean you shouldn't quote it. And again, we're still discovering it. So if you find sweet spots, like Jason's pulling up here, some of the presentation materials.
17 minimum age. That's interesting.
I don't know that that's going to be a big one,
No.
but again,
75 is
we'll
kind of
find.
nice for those carriers that cut off at
Mhm.
70 for groups that skew maybe a little
Mhm.
older. I do
Sure.
know for a fact from talking with their rep over at Voya that associations are not something they're interested in right now. Employer funding is definitely not a strength whatsoever right now.
Mhm.
But, we got a little slide deck here.
Yeah.
They also price in 5 to 10 year age bands, which is interesting. But I would say, same old game
Yeah.
as some of the other carriers in the space that we're using right now.
I will say one thing. Again, this is not product related, but I did spend some time at a conference last year with their team. Really, really good team. I really enjoyed spending time with them, the people that built the product.
Yes,
So, again, don't know what that's worth yet, in terms of the actual outcomes, with the enrollments, but that's always a good start. If you like the people there, it's likely that culture, in terms of what they're building and the service is good.
100%. And then we have MetLife and Federal Life. Now, Federal Life is a new player to the game, and I just got to say, Gail, when you annotate, it's annotating on everybody's screen. So I'm erasing it as we go. I apologize. Um, Federal Life is obviously a new player to this. I don't think it's a name we've actually mentioned out loud on the study group before, but a traditional solution that is coming to the market. And I suppose since it's on our portal, we might as well talk about it. It's not here yet, but what can you tell us, Mark, if anything, about what we can expect from Federal Life outside of what's on this chart?
We're still learning about it, obviously, too. It's a life care product. So if you guys are familiar with the NGL product, same TPA, reinsurer behind this product. True Group, though, traditional long-term care product, we haven't seen in a long time. Even the products that we see, like Life Secure in the worksite, are filed as individual products, not as group ones. So that will lead to some interesting, dynamics with what they're going to approve from a group perspective. I think they're going to come in a little conservative because that's just their style, which is wanting to have employer funding being a big reason to use them. The 25, you'll see group size. They're probably not going to want to do smaller groups to start. And the fact that you have a traditional product, though, opens up many doors, as we know. One is that tax deductibility, which we talk about a little bit in the group hybrid space, but it's not really the lead thing, and it's more complicated. Federal Life being traditional allows you to do the employer-funded tax deductibility and also the employee benefits tax-free. So that's a big one. Partnership protection, right? So just think about all the qualities of things you like about traditional long-term care, but also getting, the benefits of it being in the group market. I think that's what we're going to find that the right groups are going to fit that criteria. The Unum cases too, I think are a big opportunity because a lot of those came from that standalone traditional product, and maybe they want to move into a new version of the same product. Even though we love the hybrids, it's a re-education conversation, and sometimes the clients are really don't want to re-educate the employees and have to explain something different.
And
So
in
this is a
almost all
better
cases that we're
transition.
seeing with the Unum
Mhm.
cases, they were employer funded. So the employer is already culturally open to
Mhm.
employer funding, which definitely helps in this case.
Exactly. So you can kind of like move them into a new product, especially for those new hires, but not change how the setup worked
Right.
with what they were already doing. So, like I said, there's going to be a lot of things we're going to discover because again, we don't know about those until we get real cases and we start to quote it and learn their process. But the reason they're on the list is we're working closely with them to also help build out the enrollment process and make sure that the experience and the process will be similar to how we handle other groups. And I think that will benefit, everyone in this room, but also just the market as a whole. Because you don't want a carrier that like is getting into the group market, but then like kind of fumbles the actual enrollment itself. So we're trying to avoid that.
100%. And I gotta say my same old thing. I'm excited for this product and other products exactly like it to make their way into the group market because I think that tax deductibility is going to be a big win in pitching to business owners. Obviously, it shouldn't necessarily be the first objective on their list, but if it isn't a heck of a bonus, I don't know what is. And maybe that will push some of our hybrid carriers to start paying attention to the fact that 7702B long-term care, even on life hybrid policies with separately identifiable long-term care premiums, can do the same thing. So I really want to benefit the consumers out there. I want to benefit the people who are selling these products by allowing them to come in with a great sales idea. So, competition is going to lift all boats in that sense, I think. And the ones who listen first are going to benefit the most. MetLife. MetLife is also another, fairly new player to us in this space
Hmm.
with their group whole life product. Obviously, a very highly rated carrier, a carrier that is definitely not unfamiliar with long-term care. We've seen their product come in and out of brokerage quite a bit on the individual side. What can you tell us about what we know about MetLife, Mark? I know we've met with some
Hmm.
folks, and we've even had some folks actually change places and end up at MetLife who we had great relationships with. So
Hmm.
a lot we can learn there.
Yeah, MetLife, one of the biggest, if not the biggest worksite benefit company. So them and Aflac are like, one and two. Um, they did do it a little bit defensively, I feel like, as well, in that they added a long-term care type of rider, but they don't have the extension of benefits. And as we know, that ability to extend the benefits, whether it's individual or group, it adds a lot to the cachet of this being long-term care first and life insurance secondary. So I'd say that's one of the bigger flaws. The other one is you'll see most of the groups or the carriers on this list have that that T100, T121. So six of them have term products, and this is whole life, and therefore it's going to be a higher expense, or higher cost base plan. So when we run quotes, the client's looking for low cost to deliver the long-term care. I think it's disadvantaged from that perspective.
For sure.
One of the advantages it has, though, is that it does go to higher acceleration percentages. So you know how we have the 4% with most of the carriers, we have 6% now with several carriers, and we get a higher long-term care bang for the buck initially. MetLife will go up to 8 or even I've heard 10, 12%. So, again, it's really an extreme version of that same concept, right? Which is almost like we'll give you your money out of this policy in 6 months instead of in a couple of years. Um, so it's worth looking at. They have a New York product as well. So we've quoted a few times some of those New York cases. But so far we haven't found a good fit where we, didn't have another option. So therefore that's why they're kind of lower on the list at the moment. But you
Yeah.
never know when carriers are going to improve their competitiveness or make changes. So I would not count them out by any means.
I mean, you're hearing it right. Like, I fully agree with you that these are defensive moves, take what we have laying around and kind of slap a group retrofitted long-term care rider on it or anything else we need to do, borrow another carrier's product for a little while. But that just tells you the carriers are kind of scratching and clawing to get in here and be part of the game. And it doesn't mean that because they're disadvantaged now, they'll be disadvantaged always. I think this is just giving them time, putting something on the menu for people to be able to sell and for employers to be able to add to their benefits package. And over time, they're going to iterate these products. I wouldn't be surprised if we saw an extension of benefits rider come with this product down the road. Would I be surprised if they added a brand new term product? Probably not. I'm not putting words in their mouth and saying that's what they're going to do. But for the carriers that we're talking about that are in those sorts of situations, it's not forever. They will probably make some sort of pivot to give themselves a bigger presence.
One carrier that I actually neglected to add at this point is actually Mass Mutual. Um, they do have a product forthcoming. I don't have the rates though yet off the top of my head, But we've been working with them as well, kind of patiently awaiting the launch of that product. So you will see new products added to this list. This is not the be all end all. We may have to remove some carriers because some of these haven't launched yet, and we
Right.
might get some feedback. We don't want you to put us on your list yet.
Don't get mad at us, please.
So yeah, so just keep coming back to the portal though to see what the latest is. And also, you can download a PDF, but if you do download a PDF, just keep in mind, it may change. So just don't be surprised, if gets iterated. We're probably going to be updating this quite frequently, especially over the next couple of months as we get feedback from you and we just make changes that we see on this list.
Right. So let's get into individual for multi-life for a bit. It's a mouthful, but when you see the carriers on this list, you will start to kind of understand where this comes in. And I think one of the most interesting distinctions, Mark, is what you already brought up with Life Secure being on the individual for multi-life. We think about them like contextually. I've thought of them as a group carrier because that's the situations I've always sort of used them in or encountered them in. Obviously, they had a couple niches on the individual side. I have worked with one or two of those. But Life Secure, we would almost think of as like the true group, and they sold a lot of group plans over the years, but technically an individual product in the way that it was filed, right? But just generally have done a pretty good job of adapting this for the group market. But let's go through a couple of these. I mean, there are two very familiar names right up at the top, NGL
Mhm.
and Bankers Life. What do we want to give the people on this? Because I know NGL, very new with Honest LTC. There's some expanded worksite capabilities there, some of which is not kind of like fully launched and we won't fully promote. But what do you want to, share here?
Well, two things that jump out to me, like overall, when you just look at the columns on this list, is one is product type towards the end. You can see more traditional solutions on this list,
Yeah.
right? So just the reason we're adding them is because we want more of those solutions when clients have that need. We don't have that Federal Life one yet, so you're almost always going to do it on an individual product at the moment. The other thing that jumps out to me is that underwriting column right in the middle is you can see most of them are SI, right? Except for NGL, which also has that GI option. So those are two things to take note of. Now, the reason why I'm excited about them broadly is that minimum participation. When you're an individual product, if you're being offered to individual and to worksite and you have simplified issue, you might be able to go down to one person because you're not actually signing a group application at all. So that's an advantage to products that are individual for multi-life. The other big advantage is that when we say non-traditional groups, best for non-traditional groups, that's where we're finding a lot of fits with our cases that are in our CRM is, hey, we have a lot of association requests, especially from you guys on this call. And we're like, hey, we can't get a true group product because those carriers are very selective about it. They have to file it in every state for associations. Another advantage to individual is we can work with a lot of associations that don't fit that bubble, right? They're national associations, so we don't have enough concentration in one state for the group products, um, and I think that's a better fit. So,
Yeah, and Mark, I always use as an example on the True Group side, some of the difficulty with associations or what the True Group carriers are looking for. I always say, we probably won't be able to get a True Group offer for the National Association of People Who Like to Ride Bikes, but that's what this section really can kind of help with. It's kind of a gap filler, for lack of a better word.
yeah. So those are the big things. Going back to your original question about, kind of the carrier specifics. National Guardian Life, which is just piloting a program, so just keep it close to the vest, I would say right now. They're still trying to feel out exactly what those cases look like, and they're building their process around it. They want to take it slow. They have that 25 minimum because if you fund at least 25 and it's 100% of the group, they'll give you the guaranteed issue. But it's very strict criteria. It's only up to age 60 as well. So just again, they're kind of like I said, testing the waters a little bit more. And then if you can do 25 issued, they'll give you the simplified issue. The one caveat on their program is they actually cost more for their underwriting concession product than the full underwriting product. You actually get a discount on the full underwriting side, which is contrary, right, to how we think about groups. Like, is there a group discount? That's not the reason they're offering this. They're offering this to make it quick and easy to get the coverage when otherwise it's a lengthier process. And they're trying to price it for the risk that they're going to get some people that have adverse health,
Right.
right? Obviously. So it's worth seeing how that goes. I think it's definitely a worthwhile experiment. We love having the extra options, but we don't know yet how it's going to turn out. And I think they're still trying to learn from their first cases what it looks like. So that's newer.
They'll continue to
Bankers,
learn and
okay,
iterate, right? You know,
yeah.
just like again, like all of these carriers. But it's really nice to see the mentality.
Mhm.
You know, being able to speak with some folks over there and have a full dialogue that shows, you know, they have a real plan in mind and aren't afraid to adjust as they need to.
Yeah. So you're going to see like all of these carriers for the most part. We'll get into nationwide later, but all of these carrier, the top five carriers here have some hair on them. There's some type of thing that's going to make them potentially not as attractive as the true group, but they're fitting a case that you couldn't get otherwise. And it's not just because people that have health conditions, like we said, it's designed for a group of people that we want to do marketing to that really want to access this, but the true group carriers don't fit for one reason or the other. Bankers Life is a career company, so a lot of people in this group may not want to offer it because it's hard to get a contract or you can't get a contract with the carrier. Buddy does have that contract though, so you can partner with us to do that. We've expanded this recently with bankers because we've had great experience with individual referrals and very high approval rates. 95% of our cases have been approved. So it's much higher. That SI is legit. Approval timelines, 1 day approvals. They're actually the largest selling traditional carrier in the market right now. And so we don't want to ignore the fact that we can use a product that's done well with their streamlined process and underwriting results in a group setting. And again, that could be for any type of group because it goes down to one. You know, it's going to be a list bill for employers if you do employer funding. And otherwise, the enrollment, though, it's going to be like an individual enrollment. So we're building our process to support an enrollment with individual applications right now. But we're still figuring out how we want to support it. And again, you should too. Like, don't assume that it's going to be just as easy as a true group product, right? We have a really well-defined process there. This would be an experimental process still.
100%. And you know, Bankers has pretty interesting pricing as you get up there in age on 5% compound inflation protection as well. So some really just interesting sales niches for that product. And like you said, you know, the underwriting pretty darn conducive for a group setting, though it's not 100% guaranteed acceptance. It's targeting a very high amount of acceptance here. So
You want to keep going down the list?
shall we?
Yeah, I'll do a speed round here. I know it can be overwhelming. There's so many options now. Reframe, we like the team behind Reframe. They're like a tech company. They built a really great process. They originally launched it, if you guys remember, for I think it was Federal Life actually a couple of years ago, and then they've actually moved that over to Continental General as the carrier. Negative side is their B plus, so just keep that in mind. Again, usually E&O can cover B plus. Like Equitrust, on the annuity side, it's really about the strength of the product. It's an IUL with LTC, so it's a little bit more life focused. It's a little bit more about cash value. So again, not that pure LTC story, but it does go down to one life, and it's designed for groups. And again, a lot of associations that really want that IUL type of product with very good underwriting outcomes, right? High percentage approvals. I think that's a fit. So we're kind of in our stage of kind of experimenting with it, getting quotes right now. And by the way, we will have the pricing in the group quick quote for, I would say, most, if not all, of these carriers in the very near future. So you can kind of get your arms around it and see how that stacks up. But we're very likely to show more of those life insurance benefits with the reframe because the IUL story is a big part of the reason people are buying it.
100%.
Um, Life Secure is not any different product than what we've offered in the past. Right now, I would say we're not doing very much quoting with it, but one of the reasons we have them on the list is that They did have an ownership change, and the new ownership seems to really be more bullish about wanting to innovate and do more in the long-term care space. So I've heard rumors that they're coming out, they're trying to develop their LTCI 4.0 for 2027, but I've also heard it's too early to say what that's going to be. So
Yes.
they're kind of on the list more for the future than I would say the present product. But I'd be remiss if we didn't include them because they're still out there in the market. I don't think they're doing very much sales currently, but given the, kind of the appetite has changed, that they might be putting more investment into it. They have a new sales team, and all of that. They're starting to promote this again.
Yep. And I've seen some materials floating around out there, but nothing 100% concrete as of yet. And then, of course, CareScout and Nationwide are two pretty familiar names to us. And I know when we speak to Nationwide, just because we have a really good relationship with a lot of the wholesalers, with the underwriting team, with some of the executives in distribution. We hear it's on the 5-year plan, but we're working on something for more true group. But right now, we have the ability to obviously apply their individual product to worksite situations. And
Oh, wait, let me correct that. We do not have that yet. So this is not NA, not available for
oh,
the
excuse me.
website
Yes, sorry.
yet. But it's something that we've heard from them that they're working on. So we wanted to at least kind of give you guys a heads up, I will say, that we expect them to come out with a product based on Care Matters,
I should have
probably
been
in the
clear.
future.
Yeah, I meant like as you could apply any individual product to say a small group, but
Gotcha, gotcha. Yeah, but the simplified issue version of it is not available yet, just to be clear.
perfect. Any notes that you want to give on CareScout right now? Because I know they're still kind
Yeah.
of building up, building up.
Yeah, and I'll probably add the product type, the Care Scout services. So it's twofold what Care Scout's doing. They're doing their Care Scout services, which is think of point of claim or point of need value adds that you can provide for finding home care, for assisted living, for a plan of care. So they have a whole suite of different services that they've kind of put together in a package. They're going to be offering this through brokers, so you can sell those services like you would sell an insurance product. It's a brand new program, so we're all kind of learning together here, and they're just launching it. We think that that will be available sometime in the summer or fall of this year, the Care Scout services. And the other thing that's exciting is they did come out with a new individual product, but they're also working on releasing a worksite version of that product. So it's still TBD. It is not available, as you can see in the marketplace. But obviously Genworth has a lot of resources, and CareScout, now the rebranded Genworth, is going to be investing a lot in that effort. So I do think they're going to be formidable and come up with some, niches, that will fit. But still too early to tell. There's a lot of these on this list are we know it's coming. We're either testing the waters or hearing about it, but we'll see how it plays out. Now again, Genworth had that reputation in the past, for rate increases, and the rating of the company, you can see B rating can be, susceptible, right, to some objections. So you just have to kind of measure whether the brokers you work with or your clients have any concerns about that. Sometimes that's a good thing, their experience in the market, and you really are leaning more on that experience. But if you run into some resistance, that's also going to direct you probably to a different carrier if you feel like there's too much friction because of the past, reputation there. So we'll see. Again, we like what CareScout's doing, and we want to support all the carriers because it helps us all as a marketplace.
And like most all of these carriers, they've got great people behind those doors
Yeah.
as well that are working on this and pushing this forward. So,
Yeah.
really great team.
Yeah, yeah, that's a good point too, is I like the strategy of the company. Like the people that they brought on that are launching these new products, they really get it. They are very aligned with like kind of all our culture too at Buddy INS. So that's a big factor in this too. It's, this business is about relationships. So you kind of have to kind of have faith and vision that where they're headed and where you're headed are going to end up in the same place, or at least
Yeah.
they'll listen to our feedback more closely if
Yeah.
it's not.
If you
So
do a lot of
good point.
long-term care business, I guarantee you, you will know at least one person who is on the Care Scout team who has popped up that you remember from other setups. And of course, Genworth has helped to train, oh, 10 to 20% of our industry at least on long-term care of the professionals out there. So that has to count for something. So real quick, Mark, I think this is just going to end up being like a portfolio overview. We'll have to do a small group seminar next week. I will point your attention to it after, we wrap up here with this. But why don't we talk about non-insurance long-term care solutions? True Freedom is a bit um, different than I would say the other two sections as far as categorization. But we do know True Freedom just from the individual side. You've seen several study groups on True Freedom, not an insurance product, but essentially think about it as buying home healthcare hours in bulk. Um, and they do have the ability to work through affinity programs. And what makes that really, really important is look at our state availability, right? All states and all ages, right? So it's widely applicable. Again, not an insurance product, but a widely applicable long-term care solution, long-term care funding mechanism, funding solution.
Yeah, the
So
one thing
very interesting.
that's pretty true of all the products that we saw above is they require actively at work. So to Jason's point, I've been looking for a product, and we've been looking for a product for many years that can we do something for groups in that 65 plus market, especially the Medicare agencies we talk to and Medicare agents. They're really eager to have products they can sell. And we know short-term care can do that, but I'd like to have something like that in a group type of setup. So this is kind of a good foray into that. And I do predict we're going to see other individually filed products for that marketplace. So think of a group short-term care product.
All right.
This
And
one's not exactly that, but that's the intention here is let's open up new markets for clients that really have a need and the risk fits what the carriers can accommodate.
yeah, and even think about some of our favorite trade associations that we work with. It's not all actively at work individuals, right? There is a subsection of retirees and lots of associations out there. And we kind of have to pretend, for the purpose of True Group offers, that those folks don't exist, right? Not actively at work. So, again, nice little gap filler to be able to meet the needs of some folks who wouldn't qualify for a true group. And then, of course, we have um, what I would essentially, I don't know a good word for this yet. Long-term care value adds are probably the easiest way to describe the rest of these options. Some built directly into the products, some like Amada Senior Care just do an excellent job with clients of all shapes and sizes. So just by the nature of how they do business, naturally fit with a group long-term care policy sale, right? So help with activating the claims and a large national home healthcare franchise there by your side when you need them. Pretty powerful offering alongside long-term care products. But T-Care, Home Thrive, Care Loop, Family First, we've seen um, these solutions, many of them built directly into products by the group long-term care carriers themselves. So, what do you want to give for a brief on these, Mark? Because I think we'll see more in this avenue going forward too.
Yeah, I think the key thing for me is you can offer these Amada Senior Care, Care Scout services, and these solutions as like a standalone offering.
Yes.
So you're talking to a group like an employer. They say, "Hey, do you have anything to help me with family caregiving needs?" I think it's important to bring up these options. Now it's tough because you have to kind of get familiar with how their approach works, how they work with brokers. But I think it's good to say yes, that you have those connections. It gives you more credibility. And ultimately, I think it can help you sell the insurance case potentially too. what I've discovered, and I'm sure you guys will experience this too, is if you give the client too much too soon, they'll do nothing. So we're still really leading with the fact that, this is a benefit that you need, and that's become a very streamlined sales process. So I wouldn't necessarily offer all these at that one time. But if you hear those signals from the client, or they're resisting the insurance solution, you may go down this path instead and continue that relationship in that way. And think about how you can add these at no cost to the employer too. So Amada Senior Care, for example, hey, would you like to have a company that we vetted that can help clients to review their policies, or if they need to file claims, or just to find a caregiver, period? They could put the link to Amada Senior Care right on their intranet for their employees. So there's ways to offer this, like Jason was saying, as a value add without a cost to the employer. And again, if you have Amada there, Amada is going to help you as well if referrals come through that, help continue to build that relationship. So
Yeah,
we have to be
and
thinking more broadly about how do we help solve these issues.
we don't talk enough, well, we do, but people don't talk enough about how Amada helps prevent tons of, you know, claims blowback reaching the agent, right? Or scenarios of, well, I thought I had an eligible claim, but I was denied by the carrier, right? Like they do a lot from that side of things to help make sure people understand when they are on claim, when they are not, and if they are, helping to get them through, unwaveringly so. I think that's just such an underrated thing. So to be able to apply that to the group side is a super huge deal. Um, so I think that is all that we have for the roster there, because we are nearing the top of the hour and need to wrap things. I do want to give this its own session, so maybe next week or the week after we will run through this. But we now have an enrollment guide. Essentially, it looks and feels very much like our group sales process page, but more geared toward small groups and geared toward execution, geared toward helping you do this for small groups on a self-service basis. Like I said before, we are finding that small groups are becoming a big part of what we do and a big part of our business. And when I see people getting into their first group cases, it is generally with a smaller group under 250 lives. So we have done a lot, and many thanks to Gretchen and Joe and Sandy and everybody on the team for collaborating to put this together. But when you have a small group that you feel is ready to go and ready to do this thing, this is a kind of full toolkit for you, not just reading best practices and getting some FAQs and answers, but getting an idea of what your goal is in each sort of step of enrolling a small group and resources that are there with you. An enrollment checklist that makes sure you're checking all of the boxes with the employer, which is super important when you're doing this thing self-service. Education and marketing. There are pre-packaged email series, flyers for enrollments, webinar presentations, um, and demo pages and benefit guide pages for each of these carriers, and educational articles. I mean, we are packaging this all together for you. What you need to do is go out and meet the group and ask for our help in where you need it selling the group, even when it comes to platform setup, when it comes to the carrier implementation side. This page is training you to speak the right language. If you are worried about jumping off the diving board, there is far less reason to worry. There's a wonderfully handsome guide that I vetted over the last few days that is just incredible and is going to get even better. I don't want to get into the whole thing now because, like I said, I think it deserves its own session, but I would love it if you would go down into sales guides and take a look at the small group page because I know many of you if you are going to be working with us on a group case, especially your first, it will likely be a group of this size. So, yeah, just thanks to all the team for all of their work in putting that together. And we are here for anything you need in the meantime. But for now, I hope you really enjoyed the overview of kind of that expanded carrier roster. As you look through our sales tools, you'll start to see more and more of them pop up when they've sort of past vetting, when we're through that initial sale. We need to learn it and analyze it and synthesize it for ourselves and live it. But our goal is to put as many of those products in front of you as possible with regard to our sales tools so we can empower you to use them as well as you possibly can.
Yeah. And one thing I do want to mention and kind of piggybacking off what you said, Jason, is you have all these products, but the goal for us is to have one process for you to follow in working with us.
Hmm.
So regardless of what product you're going to use, it's the same process where you're going to go to the portal, you're going to follow those steps, which really is going to lead you down to the path of how to quote it, how to submit it. So we'll help guide you with the different carriers and some of the nuances, when we're getting proposals and doing enrollments. But don't worry about all of that, right? Just get the cases and the opportunities, and then the rest of it will kind of fall into place. It can be easy to get overwhelmed, right? When you have like what, 15 options on that list. You don't
Yep.
have to memorize and learn all those options and figure out which one to quote right away, right? You just need to start off with a case, use the tools, and it's going to guide you. You're going to probably have one or two that is clearly the best fit for your case, and that's what you're really going to focus on from there.
Couldn't agree more. Just focus on finding and driving forward opportunities. And when you feel that feeling of nervousness, you know, think of us as your pincushion. Okay, I'm feeling a little overwhelmed. I should get a hold of somebody on the buddy team that I've been working with and talk through the logistics of the case and see where they can actually pick up the baton and run with this for me. So I think that's a great way to end it. Really appreciate y'all being here. I really appreciate your positive feedback as well and conversation. But we will be back with you this time next week. Until then, be well, and we'll talk to you soon.